Hi, Thierry Roche here, host of Talk Radio's Insider Real Estate, with your Homebuyer Insider Secret number 4. How to improve your credit score and how to get the best interest rate. Getting the best interest rate on your home mortgage can save you almost $100 to $300 off your monthly payments. Interest rates are basically determined by two factors, your credit score and your choice of lender. So here's how to improve your credit score and thereby get a better interest rate. Your credit score is a critical element in the different rates, tiers, and types of loans that can be made available to you. The higher it is, the better the interest rate you get. Having a perfect credit score, which means a score of 720 and above, will allow you to get the best rate. The next tier, 680 to 720, which also means a decent to good rate. 680 to 620, will get you an average interest rate, while 620 to 580 can still get you financing, although at a little bit poorer interest rates. Finally, a score of 580 or below, it's going to make it very hard for you to get financing at all. Don't worry too much. If you have less than stellar credit, you can still improve your score by acquiring the services that are made available to mortgage companies who can do a rapid rescore. Not only can this increase your credit scores to qualify for a better interest rate, it can also fix any mistakes, false entries, and other negative issues that are bringing your score down. To give a better idea, say you have an interest rate of 6.5% on a $200,000 mortgage. Improving your credit score from good to excellent, or even from good to very good, can secure maybe 5.5% interest rate or 6% on your mortgage. That's a 0.5% to 1% change. Doesn't seem very significant, but calculated at $161 a month or $1,932 a year in your interest savings on just that small change. In 10 years, that can be $20,000 saved. Now, if the rapid rescore was unable to increase your credit score, you can still go ahead and purchase a home, since you still have another way to get a better interest rate. All you need to do is pay your monthly mortgage payments on time for at least 12 months. And you'll have what's called in the industry a well-seasoned mortgage. Now, with this good mortgage payment history, proving you can make higher payments, it'll be much easier to refinance and get a lower interest rate than when you started. So don't fret about being trapped with higher interest rates for the next decade. We can help you refinance or get a mortgage within 12 to 24 months and get you the best interest rates and lower monthly payments. Another tip, your choice of lender has a huge impact on your home's mortgage interest rate. You can either go for mortgage bankers or mortgage brokers. And though they both advocate having the best program and best products, who should you pick? As an insider, mortgage bankers have my preference, and here's why. First, mortgage bankers have their own money as well as other sources of money with sizable lines of commercial credit that they also have available. They can literally write checks for mortgage loans to buyers instantly. Mortgage brokers, on the other hand, are only brokers. They have no money to lend. They act as a middleman by taking your loan application and shopping it to other mortgage lenders. Now, or even other mortgage bankers. Second, mortgage bankers, they can access their own money, thus allowing them to decide by themselves when and to whom they will lend, as well as being able to adjust for the rules. They do their own underwriting oftentimes and also get better interest rates than most mortgage brokers. Now, mortgage brokers, they'll say they're better than bankers since they have many types of different programs from numerous different lenders. More so than those with credit issues would benefit. However, they don't reveal that mortgage bankers are also capable of that and that they're not limited to just using their own money. That's not to say that mortgage brokers are always inferior to mortgage bankers. Those needing financing who don't fit the standard guidelines can use mortgage brokers to find a lender specializing in unordinary loans. Another scenario is when the borrower has a certain unusual credit or employment circumstance and would be assisted by the broker who can tap into more sources of unconventional mortgage financing. One critical thing to keep in mind when shopping for rates, and don't make this mistake, don't compare the interest rates of one company today with the interest rates of another company tomorrow, because the market changes twice, sometimes 3 times a day. So do the interest rates comparisons, make the comparisons fair. You'll have to call mortgage lenders within the same time period, such as the morning or during the same hour, to reliably compare the loans and interest rates they offer, because they all change with the market. You can find out more about different strategies we're using, insider strategies, learn from my real estate radio show to save home buyers tens of thousands of dollars on their home purchase and their financing every day, right here in Northern Virginia. Just check out my free live online webinar at www.homebuyerinsidesecrets.com. That's homebuyerinsidesecrets.com. You can also get all of these insider techniques applied to your personal home purchase with our free Insider Access Homebuyer Savings Program. And you get a minimum guaranteed savings of $25,000 or more. And the best part is we actually guarantee you save at least $25,000 or more with my exclusive strategies. Plus the service is no cost to you. Go to homebuyerinsidesecrets.com and find out why even other realtors and mortgage lenders actually use me as their own personal buyer broker on their own home buying transactions instead of relying on themselves.